Something went wrong and you need money right now. Just get a payday loan, right?
Wrong. Hey, I'm Alex.
And I'm Philip.
And we teach you what you need to know about your personal finances using words you can understand without boring you to death.
Because adulting shouldn't suck. If you're new to our channel, don't forget to hit that subscribe button. And in the comments below, let us know if you know about payday loans or not.
In this video, we're going to tell you why payday loans are a big no-no.
Growing up, my mom got payday loans. And me being 13 years old or so, I was approximately that age. I don't remember exactly. But me being that age, I didn't really know what was wrong. But pretty much what had happened is my mom got a payday loan. And she used that money. And then she was supposed to pay the payday loan with her next paycheck. But the paycheck wasn't enough to cover it, or she wasn't able to go that long without having, a paycheck. So she had to get another payday loan to pay the payday loan. And the cycle just ended up rinsing and repeating itself. And I'm pretty sure to this day she still owes money on those payday loans. And they're just bad, okay? Okay.
Payday loans are really bad.
Super bad.
They suck. There are way better alternatives than going this route. But first off, what is a payday loan? It's a short-term loan, typically in the range of like $300 to $1,000.
The amount's going to vary. The amount's going to vary depending on your state's laws because each state has different laws governing these type of loans.
Typically, you got to pay them back within 2 to 4 weeks with interest all at once.
Yeah.
And based on those state laws, that interest can be disgusting.
Payday loans can sound like a lifesaver if you're in need of some quick money. But with the high fees and the short repayment terms, getting into a payday loan can get you into a cycle of debt that will be never ending, just like what had happened with my mom.
In order to get qualified for a payday loan, they don't require very much. All they want to know is that you have a job verified by a pay stub, that you're 18 years old or older, and you have a bank account. They don't even do a credit check. They don't care if you got bad credit or no credit. They just want to loan you some money so they can charge you a buttload of interest. You can still get rejected for a payday loan even if you have everything that they want. Here's an example of some of the things you can get rejected for.
These examples are going to change from state to state because each state has different laws regarding how these type of payday loans will work. But here's a few examples again of what those would be. So if you don't make more than $500 a month, then you're probably not going to get approved. If you have too many payday loans already, probably not going to get approved. Apparently they have a system that they can check, see how many payday loans that you have in the system. So if you go to one place to try to get a payday loan to cover the payday loan at another place, not going to work out. If you're active military, probably not going to get accepted. If you have a recent bankruptcy, not going to get accepted. If you haven't had your job for more than 90 days, probably not going to get accepted. And then if you opened your bank account too recently, probably not going to get accepted. So again, there can be more, but those are going to be some of the ones that can get you disqualified for the loans you shouldn't even apply for.
And like I said, just to reiterate, these things change based on laws from state to state, and every state has their own laws that can apply to what can disqualify you and their own interest rates for how much they can gouge you when you take these loans out.
Yeah. Payday loans and payday loan companies can go by very many different names in different states. Here's a couple examples of what they're going to go by because they think they're slick. Payday loans, cash advance loans, deferred deposit loans, check advance loans, post-dated check loans, and credit access loans. They're all called different things, but typically they all work the same way. So stay away from them.
They all suck, no matter how you name it.
Yeah.
Payday loan places are typically going to require you to post-date a check for your next payday. That way, when the time rolls around, they can cash that check for however much you borrowed plus any loan fees. They will either do that or they'll have you electronically set it up so they can take it right out of your bank account for the full amount plus any fees. And again, it's due in full on whatever day you agreed to, whether it's 2 weeks or 4 weeks or whatever on your payday. Even though your loan is due back within 2 weeks or 4 weeks or whatever your agreed upon amount of time is, 80% of those loans are not paid back in 2 weeks. And the other 20% never get paid back and go into default, and then they go into collections and ruin your credit.
Forever. States have different rules on how much fees they can charge you off of the money that you owe or the money that you borrow. On average, they're going to charge you anywhere from $10 to $30 for every $100 that you borrow. So for example, if you were to borrow $500 from a payday lender, you're going to have to pay anywhere from $50 to $150 just to borrow that $500. So at the end of that 2 to 4 weeks, $650 is due. And if you don't pay it and you have to roll over that loan or get another payday loan to pay the payday loan, that's where it starts to get crazy because you got to pay more fees on the money that you already borrowed.
Per the Pew Charitable Trust Online, they estimate that 12 million Americans take out payday loans every year, and they pay $9 billion in fees. It's not even going towards their amount they took out. That's just $9 billion in fees.
Madness.
Disgusting.
So we're going to start a payday loan business?
Dude, we'd be rich.
Oh, man. Crazy.
These scumbags taking advantage of people that don't know any better. Yeah.
On the bright side of things, if you do need a payday loan, which, I mean, again, you shouldn't get a payday loan ever, so don't do it.
Ever.
But if you got one, you can get money in as quick as 15 minutes, or if you do one online, you can have it deposited into your account by the next day.
Walk out of there with cash in hand.
Yep, but man,
Screw
ain't worth
yourself
it.
over.
Don't do it.
So what happens if you can't pay back the payday loan on the day that it's due? Well, if they have your bank account and routing number, they're going to try to take it out of your account electronically. If you don't have enough money in there and it goes in the negative, now your account's in the negative and you owe the overdraft fees to your bank. If it doesn't go through, then the payday loan company is just going to try and take out a smaller amount of money to see if that's going to go through, and then they're going to do multiple times of that same thing. So they're going to repeat it as many times as they can and try to get their money.
They're going to get their money.
Unless you think you're clever and then you shut your bank account down because you don't have the money to pay them back and you think you can just stiff them. Well, you can, and then you're going to go to collections and you're going to destroy your credit, and your interest is going to be disgusting because you never paid it.
Yeah.
That's a bad idea.
Don't do it. Sometimes you can get your repayment date extended, but typically what happens is that the borrower ends up reborrowing more money from the lender to pay back the lender.
Bad idea.
It's crazy. According to the CFPB,
The Consumer Financial Protection Bureau,
people that take out payday loans, on average, have to reborrow 9 times or more to get that loan paid back.
oh, man, think of all the fees.
Oh, it's madness.
No. 9 times.
9 times.
9.
Man, what would be the fees on like $500 if you had to borrow 9 times?
And over and over, because every time you don't repay it, the fees go up and your interest goes up. What's the average interest rate? It's like 400%.
Yeah, something crazy.
Yeah, and it goes up from there. Higher. It caps out at 750%
Here, we'll do
in
the
most
math.
states.
Let's do
150 times 9.
It's not even going to be that because it's going to be more.
Yeah.
Because, you're going to borrow, originally 500 and then 650 and then what? 900. You
Yeah.
know? So the fees
It
are
just
just going to
keeps
keep
piling
going
up.
up and up. So we couldn't even really give you a number because it would just be insane.
Disgusting.
Yeah.
So that's why they came out with all these regulations protecting active duty military against this, because they would put them outside of military bases and take advantage of young, dumb privates. And then
We're in the
they'd be-
military, so we can say young, dumb privates.
Yeah.
Because we were young, dumb privates, and now we babysit young, dumb privates.
That's the truth. So there's all kinds of laws out there to try to protect people, but typically they try to take advantage of people who don't know any better. So these guys, they don't even help you build your credit, but they're definitely going to help you tear down your credit when you don't make your payment on time, because they're going to report it to the credit bureaus.
Yep. So don't even get credit if you use it right.
Nope. Doesn't help you at all.
Luckily, there are some alternatives to getting payday loans. They're not always not going to be the best, but, you know, as you can see, payday loans can turn into this big old spiral of bad things. So here's some common things that people use in lieu of payday loans. You can reduce your spending. You can borrow money from a family or a friend. You can get a loan from a bank or a credit union, an emergency personal loan, something like that. You can put it on a credit card. And even sometimes, in some cases, you can borrow money from your employer.
So these things are so bad that as a recruiter for the National Guard, I had a guy that wanted to join a couple years ago. He couldn't because he had fines that hadn't been paid yet, and you can't join the military if you have unpaid fines. So he wanted to join really bad so he could better his life. He was going to go to one of these places and pull out $1,000 to pay off all the money that he owed so he could join the military. And he told me that was his plan. And I looked at him, I said, dude, if you go do this, I will not help you join the military because you're going to try to better your life, and in the process, you're going to screw your life over. So I sat there with him, and I made him call all of his friends and family and piece together the $1,000, and he repaid all those people while he was at basic training, and he was getting a good paycheck. So even though it's my job to put people in boots and help them serve in the military, I wasn't about to let them screw himself over, and take out a payday loan. They're that bad.
Miss a bill if you have to. You know, go without. If you have to turn your cell phone off for a month, you know, if your power is going to get shut off, you know, the reconnection fees for your power, or your cable, or your water, or your car even for that matter, you know, there's worse things. Well, those things aren't as worse, as a payday loan. Mm-hmm. Yep.
Payday loan is pretty much your worst option you could possibly make.
Yep. And let's say you're getting a payday loan for a bill that you need to pay, call whoever you owe that money to, and they're typically going to give you a grace period instead of having you have to get a payday loan. So sometimes the solution is just a phone call away, so keep that in your memory bank.
Communication's key.
Payday loans are bad! If you like this video, hit that like button and don't forget to subscribe. And in the comments below, let us know if you're going to get a payday loan or not.
Hopefully not.
I'll fight you.
Yeah. Share this video with your friends.